Hey guys, I'm Dan, founder of the Stock Investor Studio, and this is game-changing stock market news of the week. My take on this week's stock market news that matters. In this episode 102, we're going to be talking about Tesla, AMC, Boeing, the travel stocks, the energy sector, Hilton Hotels, Krispy Kreme, they're IPOing for the second time. We're also going to be talking about Twitter, Etsy, Ford, cannabis stocks, a little bit of Bitcoin and other cryptocurrencies. Right, if you haven't already, please subscribe to my YouTube channel using the button at the bottom on the right-hand screen of this video to get notified of my weekly updates. And at the end of this video, if you've enjoyed it, please also hit the like button. And lastly, also the disclaimer, it'll be at the end of the video. Take a quick look. Right, kicking it off with AMC. I know it's all anyone could talk about this week, but my goodness, what a roller coaster. The stock rocketed early in the week, but has since pulled back slightly as investors, called the apes. The whole Reddit army got really nervous and maybe started to take some profits. Also, the fact that the company issued a further 11.5 million shares. I see financial data firm S3 Partners said on Wednesday that short sellers betting against AMC had lost more than $5 billion since the beginning of the year. I'm sorry, but my take on AMC is that putting your hard-earned money into meme stocks like AMC is very, very irresponsible and very similar to gambling. Don't hate me for it. I'm just giving you a gentle warning. I have no idea how this ends, but I don't want to be involved personally. I think it's a little bit of a wild casino, and to me, it's not investing. I'd much rather be in high-quality, reputable stocks for the long term. Speaking of AMC and cinemas, masks are going to become optional at major US theaters for those that are fully vaccinated. Right, next up, we're going to be talking about autos, and I saw an article, I can't recall where I saw it now, but based on new disclosures, this specific autos analyst said that Ford retail truck, the whole franchise plus Ford Pro plus Ford Credit could be valued at $28 a share if Ford were to achieve its 8% margin target. Now that's from $13 today. And I also read that the all-electric Ford F-150 Lightning with an extended range battery can power your house for an entire 3 days on a single charge. Now auto stocks have been on a complete tear, and I think there may be more to go over the next few years as they transition into the EV space. Right, moving on to Boeing. Stock was bumped to buy this week at Cohen Securities on air travel recovery. They've put a $290 target price on the stock, really citing the really fast improving air traffic, which is really bolstering aircraft demand. And also I saw that IATA is expecting air traffic will top 2019 levels by 2023. I don't think anyone quite expected this fast recovery in that space. Did you guys? I didn't. Investor sentiment has really turned on Boeing. Fundamentally, I think it looks really good. Also, just remember that fuel prices are now spiking, and remember that Boeing manufactures new fuel-efficient aircrafts. Plus, you have a huge rebound in travel. I really like the stock. I think it's the ultimate reopening stock, still lower by 40% or so from COVID levels. I personally own the stock. I'm going to continue to hold it. Talking about airplanes, American Airlines expects 47 of its top 50 corporate accounts to start traveling again this year, in a very, very promising sign for business travel, right? And also Delta is saying that some domestic leisure travel demand is now higher than it was in 2019. That's pre-COVID, pre-pandemic levels. So we spoke about travel stocks in last week's update, and in summary, demand for travel is literally surging. So keep your eye out on the travel space. Right, what else is surging? Demand for hotels, namely Hilton Hotels. Their CEO spoke this week about travel demand, saying that last weekend, Memorial Day weekend, was a blockbuster for them, with bookings across the entire United States as high as 93% occupancy, and bookings into the summer also surging, much higher than pre-pandemic levels. So watch out for hotel stocks as well. Let's move on to the energy sector. So energy company stocks have continued to gain, really along with oil. Western Texas Intermediate hitting a more than 2.5-year high this week. Brent traded above $71 a barrel as well. Why? Well, the reason is because the oil cartel, or OPEC as it's called, and its allies really agreed to gradually increase oil production, really signaling much more demand for fuel in the coming months. adding to the already strong backdrop that's coming through. Okay, now just a reminder, oil is already higher by some 30% this year. Right, what am I hearing? I'm hearing a lot of people are selling crypto to buy the meme stocks. Okay, now when the meme stocks start to disappoint or stop working, will money flow back into cryptos? Very likely, yes. I at least think so. So Bitcoin down around 5% this Friday morning. That's after good old Elon Musk tweeted a meme about a couple breaking up, adding the hashtag Bitcoin and a broken heart emoji. Wow, good old Elon Musk, amazing how he moves markets. Staying on Bitcoin, I also saw that a Bitcoin survey published this week by Mizuho Securities. Now, this is really interesting. Listen to these numbers. 49% of holders want to keep their position, 17% want to sell their position, and 34% want to buy more. Now, also, the average estimated price by end of the year, take a guess? $42,000. Whatever happened to $100,000? Is it because some of the funds are now going to other meme currencies or other currencies or cryptocurrencies rather, like Dogecoin and Ethereum? Possibly yes. Also interesting, the average entry price of Bitcoin holders on Coinbase is around what number? 21,000. I thought it would be a little bit higher than that. That's quite interesting. How does this bode for Coinbase? Of course, they recently IPO'd. We also spoke about Coinbase in my last week's game-changing stock market news of the week. Remember, if you're a bull on Coinbase, they benefit from volatility in cryptocurrencies, and they want to see more people wanting to buy versus people wanting to hold, right? They make money, of course, from transactions done on the platform. We spoke about it. As I said, I really like the stock. I own it, and I'm going to continue to own the stock in the future. Lastly, on cryptos, on Dogecoin, Coinbase from Wednesday this week allowed their users to trade the cryptocurrency, and it popped around 30% on the day on the back of that news. Right, snippets that caught my eye. Tesla will now monitor drivers via in-car cameras to make sure that they are paying attention when autopilot is on. Right now, these cameras will be above the rear view mirror in the Model 3 and Y cars, and will be activated to check on drivers, right? Until now, Tesla cars have really relied on the steering wheel sensors, but many drivers were, showing off their tricks to try and fool the sensors to go hands-free. I think it's kind of weird. I feel like they'd be spying on me, kind of invasion of privacy. Not a huge fan, but hey, maybe it's the right thing to be doing. I'm not entirely sure. I wonder if you'd be able to opt out of something like that. That'll be an interesting development to see how users or adapt to that type of thing. Talking about autos, General Motors said it has the chip shortage under control. Now, this week they raised their earnings forecast. The stock hit a record high, moving into the EV space along with the rest of the auto manufacturers. Now, auto manufacturers trading at multi-year highs, and interesting to note, direct beneficiary companies like auto parts stocks are also on the move higher as a result. So watch those. What else caught my eye? Cannabis stocks, right? So daily retail purchases or inflows into cannabis stocks have really spiked massively in the past week. Now, this is amid the reintroduction of what we call the Marijuana Opportunity Reinvestment and Expungent Act. I'm not entirely sure what that is. Anyway, it's now favored by Republicans, a very, very positive development for the overall sector. And Amazon also this week came out and said that it will no longer test workers for marijuana use. Okay, so it won't include that in its drug screening program. Another reason why pot stocks really got a lift up this week. Remember, the retail market, the younger generation of investors, they love the cannabis sector. I wonder if the inflows will just continue. Watch out for those stocks. They could continue trending higher as the news seems to get much more positive as we go on. Speaking quickly of Amazon, remember that Amazon Prime Day this week, they announced is going to be on June 21st and June 22nd, 2-day event. Right, last 2 or 3 snippets from me. Trying to grow their presence, Etsy acquiring privately held fashion company Depop, whose Gen Z user base, or more than 90% of its users are under 26 years old. Now, Depop's sales revenue doubled last year to about $70 million. That's faster revenue growth than their rivals like Poshmark and ThreadUp. So that's interesting. I like Etsy. I don't own it. I've never owned it. I feel like I missed the boat on that one. They've done extraordinarily well. I really think they're on the right track. I really like what they're doing, and I wonder if they'll just continue to add on more bolt-on acquisitions in the future. I like that one. If you hold it, I would continue to hold it into the future. Just my thought, not my recommendations. Krispy Kreme filed to go public this week. They went public in 2000. It filed for bankruptcy just a couple of years later, and now it's back at it. US sales of Krispy Kreme grew about 17% in the last fiscal year, and its net revenue jumped by about 23% in the first quarter already of this year. So that's huge growth they're seeing, so perhaps the right time for them to come back to the market. The chain, Krispy Kreme, they expanded their footprint from about 6,000 odd stores in the year 2019 to about 8,300 last year. So they're growing massively in their footprint around the US, and they probably want to raise money to further to extend their reach across the US. I didn't know this about Krispy Kreme. They also own Insomnia Cookies, which has half of its sales come from online. Last one for this week, it is Twitter. Yesterday announced they're launching their first subscription service called Twitter Blue, rolling out across Canada and Australia first to start to see how it goes. It's going to cost about $3.50 or so per month, I believe. They don't want to be only about advertising and looking for new revenue streams, and I think this makes a lot of sense. It's going to be focused on the power users, the big, most influential users on the platform, those that are on it all the time with a big number of followers. They'll pay more for features to be able to make better use of the overall platform and engage with their followers a little bit better. Some of the features are quite basic though, like really just like better customer service. They'll be able to change the colors of their own app, and they'll be able to delete tweets within 30 seconds of publishing it, so it's nothing too groundbreaking. Lastly, on Twitter, some interesting new features I saw they recently launched. They're going to have what's called a virtual tip jar, which will be interesting. They're going to have something called super follows for those individuals to charge subscriptions for followers to see their tweets. They're also going to have their own stories, which will be known as fleets. And they're also going to introduce something called Spaces, which will be a Clubhouse-like competitor. I really like what Twitter's doing. That's it for this week. Please don't forget to subscribe to my YouTube channel and click on like for this video. And have a great weekend. We'll see you next week. Take care.